right, 11:29 a.m. in Tokyo. Japanese markets are heading into that break. We're seeing a pretty bumper day when it comes to equities. A little bit of rebound from what we saw yesterday. 2% gains for the Nikkei 225 this morning. The topics in similar measure. Dollar yen still the big focus here. Yes, those GDP figures were better than expected for the second quarter. But 144.11, that's definitely the one thing to watch here today, Dave.
Yep, that's the nearest sort of technical level, and certainly beyond that level, it's there's really nothing else.
Yeah.
Going back to when the asset bubble burst, and that takes you all the way back to when Michael Jackson came out with Dangerous, 1992, just a reference for the day. We're within 3% of that level right now, which, to Yvonne's point, though, when you look at what's happening, this reversal of what we saw yesterday, so we're still seeing some dollar strength in some pockets of the region, but most equity markets going into the Japanese lunch break are actually higher. The only weak spot you're seeing today, parts of Hong Kong, for example, within that, parts of the tech space, really leading that one down. Can we get GMM up, please, if we can? When it comes to the commodity markets, we're looking at oil prices, for example. You had Brent settling at $88, roughly speaking, and going into today, a little bit of weakness through there. So commodity markets, that's the lowest level for Brent prices, Rish, since about January. So we're still quite some distance away from levels at the start of the year, which takes us into the 70s. But yeah, you can really see the trajectory of some of these growth proxies really starting to come off.
Yeah, absolutely. We're looking at the first word news because certainly growth prospects is something that the Fed's going to be looking at. And the latest beige book saying that high prices and a tight labor market is going to be weighing on U.S. economic prospects over the next year, even with inflation showing some signs of abating. The report typically is published a couple of weeks before each meeting of the policy-setting FOMC, Federal Open Market Committee, showing that price levels do remain high, with food, rent, utilities and hospitality services increasing substantially. Talked about the Bank of Canada delivering its fourth outsized consecutive interest rate hike. It's all designed to drag inflation down from 40-year highs. The policymakers there lifting the benchmark rate by 75 basis points. We've got now a handle of 3.25% as the cost of borrowing, and the country has the highest policy rate among major advanced economies. Officials say that they expect to continue raising interest rates in the coming months. Chinese President Xi Jinping will be meeting with Russia's Vladimir Putin next week on the sidelines of a summit in Uzbekistan. It'll be the first in-person meeting between the two since Russia invaded Ukraine. The talks will mark Xi's return to the world stage after staying in China throughout the pandemic. Pakistan's former Prime Minister Imran Khan saying he regrets his comments at a rally about a female judge. Khan is seeking the dismissal of a contempt of court proceeding that is scheduled later Thursday. His filing calls the remarks, quote, unintentional. After losing a no-confidence vote in April, Khan has held massive public gatherings blaming political rivals, the judiciary, as well as the military for his ousting. And that's a look at the first word headlines.
Okay, let's have a look at, take a big picture look here ahead of some key central bank decisions. You have the ECB today, and I mean, is that really going to tell us anything different from what we've heard so far and that pushback from the Fed, right? So what you're looking at here is cross-asset vol, and rarely have we seen many assets, if not all assets, major assets in public markets move this much in sync. I mean, you hit some peaks every now and then during crisis, but certainly August was almost the worst, if not the worst, cross assets for bulls going back to 1981. So, Yvonne, there was really nowhere to hide, and that probably still is the case moving forward until inflation comes off, Yvonne.
Yeah, and that whole 60-40 debate, right? It continues on here. But a lot of questions about what this means. Where do you park your money now, especially when it comes to high net individuals here? Let's bring in our co-anchor, Haz, standing by with our next guest to talk us more.
Did someone say nowhere to run, nowhere to hide? Well, Von, Asia's wealthy investors taking a more conservative approach in their portfolio allocations. And according to Swiss private bank Lombard Odier, they're repositioning their funds toward private markets. Joining us exclusively is Lombard Odier Asia Regional Head Vincent Manuna. Vincent, good to have you with us. We talk about how they're pulling the money out from the public markets, but are they pulling in a broad-based manner, or are they pulling the money from just certain sectors like tech, which has been pummeled?
Well, I think what we can see from the study, that's the diversifications. And in terms of private assets, it's exactly the same. So I think they are pulling out from the market to go more into the private equity, private debt, real estate, infrastructure, and well diversified. So we don't see any specific sector in terms of private assets.
So when they put the money in the private markets, where exactly? Is it VC? Is it REITs? Is it
It's very diversified. We have a lot of private equity, a lot of VC, but more and more so private debt. I think what we can see in the region is that not all the markets have access to this this strategy currently. We see from the study that's mainly Singapore, Hong Kong, Australia. And what we are trying to do is really to provide these strategies also to the local markets, more in emerging countries here in Asia.
When you take a look at the repositioning right now, are they positioning for longer term pain? Because not too long ago, investors were saying, you know what, the Fed will ease those rate increases in 2023. But what are the high net worth individuals positioning for?
I think that's the biggest challenge, is the repositioning and done by vintages. That means you will not position 20% immediately in private assets. You will do that over a period of 6 to 8 years. You create a good diversification in terms of private assets, but also in terms of vintages.
Vincent, has this sort of game changed? Is it now about preservation in these rather turbulent times than anything else?
Yeah, I think what we can see from the study is that the biggest risk for these high networks and intra networks in the region is definitely the inflation risk, right? So I think they are looking at more safer investments these days. We have seen a lot of cash, gold, and again, the private assets is seen as safer because less sensitive to the market.
What about ESG? Does that kind of just been thrown out? There was kind of this sort of anti-ESG sort of wave that was happening across the U.S. Are you seeing any signs of that in Asia?
I think ESG and our sustainability investments are seen as bona fide investments opportunities these days. The investors are looking really at the risk-return opportunity in terms of sustainability investments. The barriers that we are still seeing are more the fact that they are underperforming strategies, but I think the whole market is underperforming these days. And I think the lack of track record, so the lack of visibility, and obviously a clear framework of what is about sustainability investments.
The sustainability, ESG, but also a move into sort of private assets. And, what is the motivation there particularly? Because it's people like this who can actually get into those that others cannot.
I think that's improving. This is what we are trying to do also with the strategic alliances that we have in the region, is really to provide these strategies locally in Thailand, in Philippines, in Indonesia, and all where we have our partnership. So I think this is something new. This is something that we are building up within the asset allocation of our clients. And this is a real demand for diversifications. I think the traditional portfolio diversifications of fixed income and equity is not good enough. We need to go beyond that. We need to diversify it from the onshore to the offshore and also to different asset classes.
However you position, the end game is to make money. It is about returns, however you look at it. So as they reposition, realistically, what kind of returns are they looking at?
I think investors, sophisticated investors, understand that the returns will be difficult in the coming months, right? But we have this short term. What is interesting from the study is that they are satisfied with their portfolio today, even if it doesn't deliver the performance. And they are looking at more medium long-term return, which most probably will be around, in the balanced portfolio, 6% return. That will be very well appreciated.
When we talk about high net worth individuals, it's really about the transference of that wealth to the next generation. That seems to be the focus, at least in Asia, in Southeast Asia in particular. Are their priorities different from the fathers, from their mothers, from the previous generation?
Yeah, I think that will be the next decade big subject, is this wealth transfer that we will see in Asia. And I think this is very interesting to see the differences that will happen, right? And of course, we can talk about sustainability. This is one of the points. The alignment in terms of perception of sustainability remains a challenge within the families across the generations, right? But we have also the liquidity approach, which is very interesting to see that the older generations, they are less concerned by the illiquidity of the private assets versus the young generations that want something very liquid. And of course, the need of advice. I think the new generations really want to be guided by the banks.
So how are they guided in terms of their exposure to cryptocurrencies? Is there a lot of interest from the younger generation of wealthy individuals?
I think And you will see that from the study. I think on the cryptocurrency, it's very interesting to see it's on the decrease, of course, because the risk of volatility is the main risk. Volatility, we have it with the crypto. But at the end of the day, it's not really part of the asset allocations today of the high networks and ultra networks because it's not part of the asset allocation of the banks. So I think it remains very low in terms of asset allocation today.
All right, we'll leave that. It could change. Vincent, thank you so much. Vincent Magdalena from Lombard Odier. Dave, it is about asset allocation repositioning, perhaps for the next few years.
Yeah, it kind of makes you think what many, I guess, historical personalities would have done in this situation of unprecedented volatility and inflation. That's for a different conversation. Meanwhile, though, if you left your money in public markets and you left them in Indonesia, you'd be doing much, much, much better than really anywhere else. It's the best performing market in the Asia Pacific by far. As you can see, we're about 10% up for the year, and we're about 20 points short, just over 20 points short from that record level. If you're wondering what really drove these gains, let's flip the boards, please. And so these are basically the 8 stocks that contributed to this gain, and by far, obviously, not a full list. A lot of them are banks, and a lot of them are cyclical. So really, also this, I guess, in Indonesia's case, it's a consumption story, but it's also, how a composition story, Rish, of how the index is really composed and what the big names are in this sort of rising rates and maybe slowing growth environment, Rish.
Yeah, because of the I word, and it's inflation and picking up right across Southeast Asia. It could, of course, naturally put a dim light on the areas of appeal as a haven amid this year's equity rout that we've been seeing globally. Let's get straight to Michelle Jamrisco, Senior Asia Economy Reporter. Michelle, Thai, Philippine inflation reports this week. Now, what did the data tell us about how these price increases are really shaping up?
Yeah, Rish, sorry to be the bearer of bad news, but the bottom line out of these reports is that inflation still remains a threat. The Philippine CPI report Tuesday showed 6.4% year on year. That was a touch, 6.3% year on year, a touch better than the 6.4% in July, but still far above their 2 to 4% target range. And you can see how import prices are really hurting in the Philippines. Just one factor there, but my colleagues Ditas Lopez and Andreo Calanzo outlining yesterday in a very colorful take how Burger King, for one, is bartering with customers, offering extra lettuce and tomato in exchange for highly sought-after onions. So just one way that they're seeing it there in the Philippines. Over in Thailand, we saw CPI speed up to a 14-year high of 7.86% year-on-year in August. The government there says inflation stabilized. They're started to stabilize in July and August because of subsidies and some government-controlled prices for essential goods like rice and sugar and medicine. But they're seeing further challenges ahead, of course, too. They have floods crimping food supply, electricity challenges coming up that they're going to try to offset with some more subsidies.
Lettuce and onions are hardly the right substitutions. Really, I remember there was the lettuce and cabbage story.
That was KFC, wasn't it, a few years ago?
Yeah. Nevertheless, I was talking about central banks then. It doesn't mean that they still have a lot of work to do. They're not done yet in terms of hiking.
Yeah, I mean, I'll start with the usual caveat that inflation here in emerging Asia is still very different from what we see in the U.S. and Europe, a little bit more supply-driven and generally overall not as severe. But that said, the pressures are, piling up, especially the external ones, including the Fed tightening and the questions there. So we're hearing a lot about peak inflation calls. I mean, yesterday, I and my colleague caught up with, a BSP Governor Felipe Medalla. He was here in Singapore. We chased him down, asked him a little bit more about this. He did say that he saw peak inflation for the Philippines this month, but it would remain high through the end of the year and into next year. And he also noted how much it matters whether the Fed starts to go with these 75 basis point hikes that are rumored, especially if they do 2. That they will not try to match that at the BSP like for like, but it does impact their thinking. And I think he is emblematic of what other policymakers in the region are talking about. They're watching the Fed intensely these days. They really are rooting for them to beat that inflation fight and to do it in a way that's not destabilizing for the global economy, especially with all the currency volatility we've been seeing of late.
Michelle, final question. So we started this out with a look at Indonesia. So two questions here. Indonesia is late to the game as far as hiking is concerned. So are they going to be late to the game in terms of exiting that? And later today, Malaysia has a rate decision and is at 25 basis points a done deal there today.
Very tough questions, David. I almost want to punt on both of them. But, Indonesia did surprise us that last time around. We'll see where they're going. This is going to be a very interesting one because they have traditionally said, even more so than some other officials in this region, we're going our own way. We have our own domestic issues. We don't see as much pressure. They did kind of change their tone. So it will be interesting to see what they're seeing out of the Fed, how confident they are of what they see from the Fed's rate path. Malaysia also, traditionally not moving as much as some of these other banks. They're traditionally more conservative in recent years with their rate moves. So I would tend to think that they would go small, but it's anybody's guess these days. So very dangerous questions to be asking today.
Oh, you tackle it like a pro, Michelle. Frisco there, senior Asia economy reporter, joining us on all things Southeast Asia. Coming up, China's megacity of Chengdu extending a week-long lockdown. How that weighing on China's economy? We'll talk about that next. This is Bloomberg.
Fa สมาร์ทบอร์ด SCG เหนียวจริงยิงไม่แตกแบรนด์อันดับ1ของไทย
No one covers the world like Bloomberg.
We have to get interest rates higher and bring inflation back to our target.
33 million people have been affected by this flooding in the monsoon.
Disruption is the whole point of a strike.
With unmatched reach and resources from more than 120 countries, the moment news breaks, 24 hours a day. Bloomberg, your global business authority.
Okay, let's have a look at, that's a quick zoom in. What isn't too quick is Chengdu emerging from the lockdown here, the extension we're seeing in the Chinese megacity extended for a few more days. Let's get a sense of the story right now where we are. Stephen Engel, our chief North Asia correspondent. Yeah, what do we know?
It just shows the extent the authorities will continue to push the policies of COVID-0. Again, we knew Shanghai was supposed to be an 8-day lockdown. It lasted 2 months. Shenzhen lasted just a week, so we simply don't know. But essentially, authorities are saying that they want to stop the community spread. So they're basically telling everybody in the central business district or the central neighborhoods of a city of 21 million people to stay indoors, and they have to get PCR tests every day. And they're going to extend this for at least another week to stamp out community spread. Some of the outlying regions, people, if there's no spread within the community, they can go about their daily business. But again, this is essentially a citywide lockdown that is continuing, and we don't know how long it's going to last, and we do not know the extent of the economic damage. We know that they will go to every extent to stamp it out.
It is, I suppose, a bit like Wuhan was. It's a bit of a crossroads in terms of transportation, a hub there. But I mean, we do have companies producing, even if it's a small component of, let's say, an iPhone, or sure. As a percentage of GDP, it's quite small. But it's actually the ramifications, the multiplier effect.
Well, Chengdu is the 6th largest city in China, so it's the largest city after Shanghai to have this major lockdown. It contributes about 1.7% of national GDP, but it is home to a number of manufacturers, including Foxconn, Honhai for the Apple supply chain, as well as automakers Volkswagen, Volvo, and VW. well, Volkswagen is VW, and Toyota. That's the one I meant. You know what I mean.
We gotcha.
So there is an economic cost. And if you look at the GDP numbers of Sichuan and as well as Chengdu, look, Sichuan had about 13.5% growth in the first half of 2021. It's already down to about 3%. And this is on top, this lockdown is on top of the drought and the heat wave that's caused the power outages and, of course, the earthquake that we just had earlier this week. So it's been really hit on a number of fronts.
And we're just a little over a month before the party Congress, right? Yep. They have to get this right, this outbreak, and contain it in a way before this crucial event.
And again, we keep on speculating and hearing the anecdotal evidence. We had a guest on in the last hour who said there's been incremental steps that after the party Congress, we could see a relaxation of the COVID-0 policies. It's purely anecdotal and speculative right now from my estimation.
Yeah.
It could potentially happen, obviously. Big delegations are going to Kazakhstan and Uzbekistan next week. They're going to G20. This is the delegations of Xi Jinping. Going to Bali for the G20. They're going to APEC, Bangkok. They're relaxing government travel and Xi Jinping's travel. Will they relax some of the COVID restrictions for the other people come, November?
Okay. Steve, thank you. Stephen Engel, our Chief North Asia correspondent. They're really related to the China growth story is really this plunge in commodity prices over in China, certainly on the back of just, incrementally more and more slowing growth stories. And yeah, just have a look at where we are as far as some of these contracts are concerned. Yeah, I mean, crude oil futures, obviously on the back of just this massive drop in energy prices globally, and everything else has basically held steady. But I mean, that being said, this is how things look since then. Might be actually good news in some ways that energy prices are falling here, guys.
Yeah. Chris Wood said it yesterday, right?
The only trade.
The only trade is energy at this moment, and China really kind of helping in terms of actually dampening a lot of the inflation concerns out there here right now. We got plenty more ahead. This is Bloomberg.
We live in a world obsessed with numbers. At Apollo, we intend to make them real every day by investing in real businesses that make real products and create real jobs for people around the world.
If you want to get into digital art, it's very easy to get into.
Clip Studio Paint.
Bloomberg has enhanced search on the terminal to deliver what you need when you need it. Now, you can simply type phrases in everyday English in the command line. Compare financials. Find people. Analyze markets. You can enter phrases or ask questions. What do you want to know today? Ask a question or visit SearchGo to find answers now.
It's really a reminder, isn't it, just how sensitive the markets are to any commentary about trade. We did see some pressure on the yuan, we did see some pressure on the futures. That is now being reversed.
We've been seeing Chinese developers really facing a flurry of winding up lawsuits, and we have one at the moment, Jiyuan, which is the latest here as well. It's been suspended on the market after it fell back in the session. It has, of course, had a terrible time of it. This is not just the first time they've had a winding up suit. This is the second, apparently, here as well. The hearing for this is scheduled for the 9th of November, guys. So there we go, a bit of breaking news.
Yep, and similar to what we saw with Sunak as well, another trial date happening in November. Let's do a quick check of the latest Business Flash headlines now. Apple has unveiled a new lineup of devices without raising its U.S. prices in one of the worst years for inflation in decades. This includes the iPhone 14, fresh AirPods Pro earbuds, and an Apple Watch upgrade that includes a first ever Ultra model. Apple is betting the new features, along with the lack of a big price hike, will be enough to ward off competition from rivals. Reality TV star and entrepreneur Kim Kardashian has a new business venture. She and a former partner at Carlyle Group, Jay J. Simmons are launching a private equity firm. It will focus on consumer and media businesses. The apparel business Kardashian started in 2019, Skims, has been valued at $3.2 billion.
All right, I mean, there's no pivot from Kim Kardashian to FX.
Oh, man. Anytime we can talk about Kim Kardashian on Bloomberg.
It
gets hard to pivot.
Let's go back to that then. Let's look at the dollar. There's really no way to do this. FX markets are doing this. I mean, a flurry of warnings from policymakers, and I think the latest one was, well, out of the Japanese this time yesterday, and the Koreans also coming out and saying, yeah, these moves are quite steep. Chinese not so much, but you're getting some messaging through media. And of course, the big one today is the ECB, how big they'll go.
Yeah, and if you talk about, just how, there's a bit of calm now in risk assets here today, despite that dollar strength. You got to wonder, have we seen the worst?
The bottom.
Have we seen the bottom? You talk to Michael Burry, and he's been tweeting saying, nah, not there yet. We're not there yet. Watch for failures, he says, then look for the bottom. So he mentioned
how
a bit
encouraging.
About, yeah. He talked about these two SPAC ETFs that are failing. Not near enough. He's talked about the crypto crash check, meme crash check, SPAC crash check, inflation check. So he talked about 2022. Yeah, we're not quite there yet.
No, we certainly aren't. We got, well, I suppose we had a rebound. We got Hang Seng now down, and certainly at the moment that the sort of fire that was lit under stocks is just going out slightly here as well. Nikkei 225 though, leading the charge before its lunch break, up over 2%. There we go. A lot more on the way. This is Bloomberg.
VK ฟิล์มที่ช่างติดรถยนต์แนะนำติดง่ายกันร้อนดีราคาถูก
เซรั่มช่วยลดเลือนจุดด่างดำ 57% ใน 4 สัปดาห์จริงหรือ L'Oreal Paris Glycolic Bright Serum
ผลลัพธ์เหลือเชื่อมากไม่คิดว่าจุดด่างดำบนใบหน้าจะจางลงได้ค่ะประทับใจตั้งแต่ครั้งแรกที่ใช้เลยค่ะ
ทดสอบทางคลินิกแล้วช่วยลดเลือนจุดด่างดำได้ถึง 57%
โดยผู้เชี่ยวชาญด้านผิวหนังเลือกใช้
L'Oreal Paris Glycolic Bright Serum
At Bloomberg, we believe in the power of ideas. That's why we launched Bloomberg New Economy Catalyst. It's a community of global leaders and innovators who are blazing new trails to transform business and government. This platform will help them share their ideas with the world and provide access to the resources they need to bring them to life. Bold thinking, breakthrough action. Bloomberg New Economy Catalyst.
What are the moonshots at Amazon that are capturing most of your time and attention?
Well, we have a unique way that we look at big new investments, and I'm not sure it's right or wrong. It just happens to be our way. And we ask ourselves when we're considering something 4 questions. We ask, if it's successful, can it be big and move the needle at Amazon? Is it being well served today? Do we have a differentiated approach? And do we have competence there? And if not, can we acquire quickly? If we like the answer to those questions, we'll go pursue it with a single-threaded team that isn't distracted by the rest of the business.
When it comes to the stock, it has fallen significantly. Do you think investors are missing something, or has tech just been overvalued?
I have never tried to predict what the stock's going to do. And any time I've tried to a little bit, I've been wrong. I do really believe that in the short term, the stock market tends to be a voting machine. In the long term, it tends to be a weighing machine. We have a concept we talk about a lot at Amazon, inputs and outputs. And the ultimate output for a company is share price. And then other big outputs are free cash flow or profit or revenue. You can't really manage the outputs. You have to manage at the input level, and that's where we spend all our time. And so if you do the right things for the business long term, things tend to work out. I think we've had very good returns for investors, and I expect that to be true again.
Lots happening on Wall Street.
I think Jay Powell said things that were indefensible.
Need to catch up?
This is Bloomberg Wall Street Week. I'm David Weston.
We've got the information and insights.
We think that's the next secular shift.
From businesses most influential and instrumental.
It's knocking it out of the ballpark.
It's a challenging dynamic.
This is a level of uncertainty that we haven't had to deal with.
Bloomberg Wall Street Week, live Friday with replays all weekend on Bloomberg Television and Radio.
Back in 1997, I was interested in the following question, which is there are a bunch of the dinosaurs called sauropod dinosaurs, which had really long skinny necks. So Apatosaurus is an example. They also had really long skinny tails. So I made a computer model that showed that in fact the tail of these sauropod dinosaurs could actually act like a whip, a bullwhip. Now the way a bullwhip makes that cracking noise is because the tip of the whip actually goes about twice the speed of sound.
Okay.
And that crack is a sonic boom.
Yep.
I think the way they got a date was to impress the females by making loud booms.
The difference between political gossip and policy intelligence. Bloomberg Government provides our clients with expert reporting, analysis, and public affairs tools that give you the edge in reaching policymakers on the Hill. When you're in the business of influence in Washington, information and connections are the currencies on which you rely. For knowledge you can act upon, the difference is Bloomberg Government.
Part of what I love about business is you get to build things from nothing.
I don't have any investors. All this is all money in. This is me just building it, building it, building it.
From the heart of where innovation, money, and power collide, in Silicon Valley and beyond, this is Bloomberg Technology with Emily Chang.
I'm Emily Chang in Cupertino, and this is Bloomberg Technology. We are live from Apple's campus, where the company just unveiled its next generation of devices, the upgrades to new iPhones, watches, and AirPods, focusing on health, safety, and satellite connectivity. And there was one big surprise: the price of the bottom-of-the-line iPhone unchanged, despite the worst inflation in decades. We are going to give you the full download, but first I want to get a look at the markets and how shares reacted to Apple's big reveals. Bloomberg's Ed Ludlow is back at home base in San Francisco. Ed, take it away.
Yeah, how you doing, Em? It was interesting because Apple didn't really push to session highs until they got to the point of the presentation where we did get the details for iPhone 14, particularly iPhone 14 Pro higher-end models. We kind of treaded water on the stock throughout the unveiling of the latest generation of Apple Watch, for example, and AirPods, but then we did push higher once those details about iPhone 14 started to come up 0.9%, nothing to write home about. But it's interesting because on 7 occasions over the past decade when Apple has unveiled a new generation of handset, the stock has actually declined, closed lower. So it's interesting to see some buoyancy there. Global Star, we're going to talk about later in the show. This is a satellite operator that was down 16% at one point during Apple's presentation, then jumped up 44%, ultimately closing down 1.4%. It has a pact to support those satellite tech services that Apple is going to offer with the iPhone. And interesting, Garmin up 3%, didn't really react, didn't move around, but it's competing with the Apple Watch. Overall in the markets was a day where we saw a comeback from the technology sector, kind of helped by a pause in the sell-off we've seen in the bond market, outperformance on the NASDAQ 100, tech-heavy, of course. Also, we saw buoyancy in the US-listed shares of Chinese tech companies. You see that on the Golden Dragon China Index. But all about Apple today. Interesting to see a gain. Still down 12% year-to-date, outperforming the S&P 500, but still on track for its first annual decline since 2018, Em.
All right, Ed, thank you. We're going to check in with you again later in the show. I want to stick with Apple, bring in Carolina Milanese of Creative Strategies, who's here with me at Apple headquarters inside the Steve Jobs Theater for the first time in a few years.
Absolutely.
Actually. How significant do you think these upgrades are? And key, are people going to buy these new devices with inflation higher than, it's been in 40 years?
I think it's been interesting to see that the focus today has been on real pain points that consumer have and also hit on the key
drivers that you see consumer talk more and more about, which is battery life, is a better display, is a better camera with low light conditions. You saw that, and you saw how Tim Cook opened the event today talking about the value of each product and then the magic that the three products that we're here for today bring together. And I think that's what you have when you're thinking about upgrading. You might have one of these products that are older than another, and you want to get into that cycle so that you can take better advantage of the new features, but also feel that magic that Cook was talking about.
Well, I wonder if the most significant announcement was the price of that, lowest tier iPhone 14, and it being the same as the iPhone 13 was last year.
Yeah, the price are the same. Is a good and a bad, depending where you're looking at it, right? We have seen some of the consumer electronic companies bringing their prices up earlier in the year because of inflation. Others, they kept them the same. I think what was interesting to maybe sweeten a little bit that price point is the deals for the trade-ins that you've seen Apple mention through the carriers in the US and directly from Apple. $800 to $1,000, depending on what model you're traded in.
So let's talk about the other things, satellite connectivity. I know that was a really big deal. And how significant is that going to be in terms of driving more people to buy these phones?
I don't know that the satellite is necessarily a purchase driver per se, but I think it's that extra peace of mind the same way as you think about insurance, right? You have it, you have to purchase it, you hope you never use it, but you know that it's there in case you need it. And it's the same with the feature of car crash detection, as an example. Peace of mind for, parents with new drivers coming on, a feature that is both on the watch and on the phone, all the way to the, throughout the portfolio. So the safety was an extra, if you like, pillar on what Apple built today across the portfolio.
All right, let's talk about the Apple Watch Ultra. Significant pricing news there as well. Very much undercutting Garmin at the high end of the market. They called this watch your dive computer. It can go 40 meters below the surface of the ocean. I mean, it seems pretty cool, but how big a market is there for a niche, rugged smartwatch?
The reality is that you have the core people that would have bought a Garmin, and then you have the wannabe, and the market for the wannabe, the ones that wish they could do an Ironman, but they can't, it's considerable, right? And I think what was smart about the design is that despite the size that is so large, it's very lightweight. And so, I have a small wrist like you do, and it looks humongous on the wrist, but it's not heavy. So I think they've done a good job in trying from a style perspective to appeal to a broader market, and they could have priced it at $999 if they wanted to, but they did not.
So what are you looking for in terms of the numbers? I spoke with Tim Cook at the end of earnings last quarter, and he said they do expect revenue to accelerate in the September quarter. Of course, we know that new iPhones are going to go on sale a week before the quarter ends, so they're going to get some additional boost there. How much of a difference is that going to make? And could it give the global economy kind of a little morale boost if Apple is able to, beat or even meet expectations?
I think you have three lines that will contribute to that boost, right? You have the iPhone, and it's interesting that they picked different times of the release for the iPhone, getting into October as well. So you have that carrying through to the next quarter. But you also have something like AirPods Pro that at $250 will drive a lot of upgrades. So there's a lot of different price point there that will help the bottom line. And as I said, it's the magic of the three coming together.
The AirPods were kind of a sleeper hit when they came out, and it's been a long time. A lot of people have been waiting for an upgrade. It was also said today that a lot of people lose their AirPods. Are they going to want to spend $250 on something that is, yes, beloved, but also easy to misplace?
Well, I speak from experience. I have a teenager that always loses them, so I feel that pain. They made it easier, though, to find them today, fair enough, right? So you can find the case, and you can find each individual AirPod in an easier way. And I think the silly thing of the Memoji engraving speaks also to that popularity, where you have households where you have multiple AirPods that live together, and that will make it easier for the consumer to spot which one is mine.
And again, with all of these products we talked about, new chips, faster, clearly, big tech upgrades, even though we might not necessarily see them as consumers. Carolina Milanese of Creative Strategies, thank you so much.
Thanks for having me.
For joining us. Good to see you. All right, coming up, Apple seems to have supply chain issues under control. Will that keep up? Through the holiday rush amidst rising global tensions, we will discuss. This is Bloomberg.
We believe in the power of ideas. That's why we launched Bloomberg New Economy Catalyst. This platform will help them share their ideas to reshape our world. Bold thinking, breakthrough action. Bloomberg New Economy Catalyst.
Hydrogen has a very special place in the universe. It's the first element on the periodic table. It is the most abundant element in the universe. And when clean energy advocates think about what can we find which would be as easy to use as fossil fuels, they think about hydrogen. The fuel that will, when burned, only produce water.
We like to imagine that if we just built enough of these and these, we could ditch fossil fuels and save the planet. Unfortunately, it's not that simple. There are some things where you just need a good old-fashioned combustible fuel. Now startups around the world are betting that hydrogen can become the fuel of the 21st century.
Watch Bloomberg Surveillance Early Edition for the news you need when you need it.
I'm Matt Miller with Kaylee Lyons in New York and Anna Edwards in London.
I'm going to be watching retail earnings from both Home Depot and Walmart.
Then surveillance for in-depth analysis.
Alongside Tom Keane and Lisa Abrambitz, I'm Jonathan Ferro.
Across the board, these are good numbers.
The big headline there is reaffirming the outlook.
How much does this give faith that you can get some sort of resurgence in consumer spending?
Bloomberg Surveillance. Be informed. Be prepared. Be ahead of the game.
Seems to have managed supply bottlenecks spurred by the pandemic, but now it has to navigate the CHIPS Act and a new policy designed to boost U.S. production of tech products. That includes approval for certain semiconductor exports to countries of concern, including China. I want to bring in CFRA equity analyst Angelo Zeno now for more. So, Angelo, first of all, let's talk about supply chain management for this new slate of products. Is Apple going to be able to get all of these new iPhones and watches and AirPods to people who want them in time for the holidays?
I mean, as far as getting it in time for the holidays, yes, we think so. I think it's interesting that clearly the timing of this event clearly being on September 7th and the actual launch of the phones, right? I mean, you were talking September 16th, I believe, is when shipments start. Pretty much a week earlier than we had previously anticipated, to be honest with you. I think that in itself should tell you that they're absolutely managing the supply constraints that, maybe they had to contend with more severely earlier this year in a much better situation. So they should be better positioned here over the next couple of months than others out there. Now, I will say this, as far as these phones are concerned, I mean, it is more supply-driven than demand-driven in terms of expectations for the September quarter. We do expect them to be supply constrained to some extent here over the next couple of weeks. And I think it's really interesting with how they kind of put the launch of these phones, right? 3 out of the 4 devices will be available at the end of next week, where the other one will be in October. So that'll help them also better navigate the constraints and put more emphasis on those Pro devices, which of course are higher priced and better margin.
So interestingly, when you look at the Apple website and the shipping times, a lot of those times have come down, which is sort of our gauge of, how much trouble are they having, making all of these products and getting them to customers, the iPhone, Mac, iPad, all pretty much coming, when you want them to come. What are the biggest pain points going to be, though, over the next few months? I mean, we've seen various chip companies continuing to struggle as we look at their earnings. What is it about Apple that they're not having these issues?
Yeah, so I'd say as far as, issues, I'd say they're in much better position than others out there. And the biggest reason is, they are the largest kind of, purchaser of semiconductor goods out there on kind of a pure play basis, right? I mean, if you take out Samsung, which kind of, utilizes kind of their own their own smartphone demand to kind of feed their own business, that's not necessarily the case here with Apple. Apple kind of outsources all their semiconductor needs out there. So they have significant needs out there. And because of that, they definitely get they're first in line in order to kind of get those goods. At the end of the day, though, when we kind of look ahead here in terms of where the supply constraints continue to be most severe, it's definitely at this more trailing edge technology nodes. It's more your kind of, your microprocessors, your microcontrollers and what have you of the world. And Apple does need to purchase those type of components. But again, they are in better position than others out there to get those orders fulfilled.
Obviously, we know how interconnected Apple's supply chain is with China. They've been trying to diversify that, and it likely won't be so intertwined in years to come, but that's still the case for now. How will rising global tension impact Apple? How will the CHIPS Act come into play?
So, I think longer term, clearly Apple does want to further diversify its supply chain, and they clearly are looking to do so. We think kind of their emphasis is absolutely going to be more so in India than other regions of the world, rightfully so, because when you actually think about where the demand upside could potentially come from Apple here over the next decade, I think India is a big reason if you are a bull on Apple, just from the natural wealth effect that will take place in India over the next 10, 20 years. So it makes a lot of sense for Apple to start kind of expanding into that geographic region. But that being said, Apple remains very well positioned within China. We don't necessarily actually expect them to, shut down any type of production out there. And to be honest with you, as more and more chip companies out there kind of evolve within China, there's actually a possibility where Apple could potentially use their local semiconductor manufacturing industry as well. But that being said, I mean, we do expect them to continue to look for ways to expand and further diversify outside of China. But India will be the key there. I don't know how much of an impact kind of the CHIPS Act will have within the U.S., but I think only time will tell.
The big question remains how many people are going to upgrade their devices in the middle of a downturn when they're already paying more for everything else. How significant do you think the pricing that we heard today, the Apple Watch Ultra at $799, the new iPhone 14 at $799, the same price it was last year as the iPhone 13, that seems to be pretty significant.
Yes, I mean, listen, I actually thought there was a possibility they could have raised the prices on some of those Pro devices, but I'm kind of happy that they didn't. To be honest with you, when we kind of look at Apple here, first off, our forecast for the upcoming cycle here in terms of the iPhone 14 cycle is actually no growth in terms of on the unit side of things. However, we do expect average selling prices to increase about 3%, at least 3%, and that's going to just be the actual improving mix. I mean, clearly they're ditching the Mini out there, adding the 6.7-inch plus device, and then just what they've announced on the Pro side of things relative to what they've done with the two standard devices. I think there's a big enough gap where you could potentially see more consumers kind of gravitate out there more towards the Pro devices, at least for the September quarter and December quarter. We remain very optimistic in terms of units. We're about 2 to 3% above the street. We do get a little bit more concerned on the macro side of things as we go into the March and June quarters and the cycle extends.
All right. Angelo Zeno, CFRA, thank you for giving us the big picture view. Appreciate it. Coming up, Elon Musk's request to delay his trial with Twitter denied. We're going to have the latest on that next. This is Bloomberg.
คนละครึ่งมาแล้วที่ฟู้ดแพนด้าส่งฟรีพร้อมรับเงินคืนสูงสุด800 บาทใครใช้คนละครึ่งสั่งฟู้ดแพนด้าเลย
You will shed light on dark matter. You will make aging optional. Because when you subscribe to Bloomberg, you won't just get news. You will get insight into limitless possibilities. Before you change the world, Bloomberg.
We were thinking big from the beginning. I mean, the reason that I was interested in doing this in the first place was a much bigger challenge than making a comfortable shoe or doing something in the fashion industry as a narrow opportunity. We thought that there was a big leadership opportunity. We looked around at an industry where there was 20 billion pairs of sneakers made every single year, and it was 100% made from plastic and the hides from cows, and it was terrible for the environment. And we thought that we could offer something to consumers that was differentiated in the way it feels, more comfortable, higher performance, and do that because we use sustainable materials. And in doing so, we could take a really interesting leadership opportunity and grab that and use that to tell a totally different story and compete on a totally different vector than what the rest in the industry were doing.
Shares of Twitter jumping in Wednesday's session after a Delaware judge told Elon Musk, no, we can't delay this trial with Twitter. Of course, Elon trying to walk away from that $44 billion deal. Bloomberg's Ed Ludlow here with all the details. Ed, kind of a big loss for Musk here, meaning he won't have as much time to pull together some additional discovery. What does this signal from the judge?
Yeah, best day for Twitter shares since mid-July. The idea being that a brisker schedule timeline for trial favors Twitter. Most analysts, including our Bloomberg intelligence litigation team, would say that that brisker schedule boosts the odds that Twitter will be able to enforce the original deal terms, which, as you know, Emma, $54.20 a share, valuing Twitter at $44 billion. And Judge Kathleen St. Jude McCormick basically said that she couldn't delay the trial by even 4 weeks. Remember, Musk's team were asking for December, because if she did, then it could bring harm to Twitter's business that she couldn't justify.
So one win for Elon Musk is that he can use the complaints of this whistleblower, which recently emerged, to an extent. Explain.
Yeah, so this is Peter Zatko, who filed a whistleblower complaint on August 23rd, basically saying that Twitter had security deficiencies, making its platform vulnerable to hackers, and in this complaint that he'd been told by a senior Twitter executive that there was a bots issue. That now what the judge is saying is that incrementally the Musk team can go out as part of discovery ahead of trial to include some of that information that was in the August 23rd whistleblower filing in their legal armory, so to speak. But again, it all comes back down to Musk having to prove the same impact, the same legal point that he has had to all along, which is material adverse effect. And again, street analysts, Bloomberg intelligence litigation analysts see this being in Twitter's favor at this point.
All right, Ed Ludlow, thank you. Meantime, on Tuesday night, Alphabet's CEO, Sundar Pichai, defended the company in response to claims that it is anti-competitive. At the Code conference, he also commented on Google's decision to remove former President Trump's Truth Social app from the App Store. Bloomberg's Alex Barinka was in the room for Pichai's remarks. She joins us now. So, Alex, let's start on the anti-competitive accusations. You know, not a surprise that he defended Alphabet and Google's position there. But what do you make of how he did it?
Yeah, Emily, he brought it up at basically every turn. Sundar was on stage for about 45 minutes, and whether he was talking about the ad market, about commerce, about competition with TikTok, he brought it back to this argument that their company, that Alphabet, is not anti-competitive, that in fact there is a lot of competition out in the market. Now, it is a timely argument for him to be making. Just last month, our colleagues reported, based on their sourcing, that the DOJ may be bringing another anti-competition suit against Google on their ad business. You'll remember that there's already a suit out there from the DOJ alleging the company dominates the search market. So it seems like antitrust is definitely on the mind of Alphabet's CEO. And he really wanted to remind us that, you know, they have rivals out there in the market as well.
Meantime, he gave some more detail than I think we would expect about their decision to remove Trump's Truth Social app from the Google Play Store. Tell us what he had to say.
Yeah, that's right. He pointed to kind of what it's coming down to for removing it right now, which is content moderation. He kind of talked at length that the Google Play Store has standards for what they expect the apps on that platform to kind of participate in when it comes to content moderation, and said that it seems like they are looking at that more closely. He also pointed out that the Google Play Store did bring on Parler recently. So there has been movement there for some of these platforms that seem to be friendlier to Trump or allow Trump on the platform in terms of getting them into the Play Store. But for Truth Social, that content moderation piece and making sure that they can kind of abide by the standards that Google expects seems to be the breaking point at the moment.
Meantime, he talked about his goal to make Google 20% more productive, which is really significant given how massive that company is. Does that mean layoffs?
Potentially. It seemed like yesterday he talked about finding kind of productivity gains. He gave some examples, past examples, like having multiple music applications on different sides of Alphabet's platforms and combining those into one. He also talked about things like teams that have perhaps 3 managers as the decision maker when there should only be one, and that slows things down. So perhaps you don't need that many people. But for Google, look, they are struggling like the rest of the ad-driven businesses out there in big tech. So he's absolutely looking to efficiencies. And it sounds like right now they're going through kind of a holistic process of figuring out where they have duplications in the business that they can narrow down and where perhaps the business should be moving faster with fewer voices to make sure that it is hitting those productivity goals.
All right, Alex Barinka for us. I know you'll be back at Code later tonight, and we'll be looking for your dispatches. All right, coming up, more on Apple's Far Out play, how game-changing its bet on satellites could be. More from Cupertino next. This is Bloomberg. So we've got new iPhones, new watches, new AirPods, but the big question is, are people going to want to upgrade in a downturn when they're already paying more for gas and groceries? That's the question.
มาแล้วที่ฟู้ดแพนด้าส่งฟรีพร้อมรับเงินคืนสูงสุด800 บาทใครใช้คนละครึ่งสั่งฟู้ดแพนด้าเลย
We believe in the power of ideas. That's why we launched Bloomberg New Economy Catalyst. This platform will help them share their ideas to reshape our world. Bold thinking, breakthrough action. Bloomberg New Economy Catalyst.
What do you think of when you think of a battery? For most, it's what we use to power devices for both work and play, and maybe even your car. Over the past few decades, they've gotten way more powerful, long-lasting, and affordable. But all of this is just a prologue to what the next batteries are going to do.
As we drive to an increasingly renewable power-driven grid, we also need to be able to store energy and release it later to cover those periods of weather intermittencies that are driving this new grid that we're in. It's a multi-trillion-dollar opportunity, and it's imperative that we figure out the solution here.
How we store energy on a massive scale is in many ways the central challenge of the fight to stop climate change.
Every Friday with 30 minutes dedicated to fixed income, I'm Jonathan Ferro. This is Bloomberg Real Yield.
Welcome back to Bloomberg Technology. I'm Emily Cheng in Cupertino, where Apple just unveiled a new line of products. Let's talk about it all with Maribel Lopez, founder and principal analyst of Lopez Research. Good to see you back here in person. You know, I thought it was interesting. They obviously unveiled, a ton of new things today. Some features geared for everyone, and some geared towards more niche users, whether it's, an outdoor enthusiast, or there was also a focus on women's health. What stood out most to you?
What I thought was interesting is we're at a real mature state of the market right now. We have to do some things that are definitely for a niche market, like the outdoor enthusiast, but you still want in every release to make sure that there's something for everybody. So we had crash detection in the watch, we had temperature sensors for women's health, we had satellite, which is in all of the iPhone 14s so that anybody can have emergency calling. So it was really that balance of things that were very specific, like you can have a dive computer on your watch.
I know, they said that word multiple times, dive computer. I didn't know
tracking
the two
menstrual
could
cycles.
be in the same phrase.
I mean, what a range.
Let's talk about the everyday. And women are half the population. How compelling are some of these women's health features in terms of convincing a new audience to upgrade?
We want this watch to be for everything, right? If you're going to wear this every day, then you want it to really do things that matter in your life. And nothing is more important to women at certain points in their life than being able to understand what's happening with their menstrual cycle. So I think that they really hit a curve that makes sense for a broad percentage of the populace.
They also doubled down on the privacy features there because obviously we're talking about really personal information.
Absolutely.
And privacy has been Apple and Tim Cook's big thing. They've continually said, we are doing this better than anyone else. We are protecting you and your data. How important is that in terms of the marketing?
I think one of the things that we're seeing is really a bifurcation of those that care about privacy and those that don't. Those that monetize you with your data and those that are saying, hey, this is really about you buying the product and it's your information. And I think no one is excelling at that message better than Apple right now.
But Apple is also building out its own advertising business, right? Is there some hypocrisy there?
We don't know yet is the short answer, because we don't know exactly what type of data they're going to collect or what they're going to do with it or what the privacy constraints are around it. But it's clear that everybody wants advertising dollars.
So let's talk about the outdoor enthusiasts and I mean, first of all, the video was just absolutely amazing, and all the different deserts and snow-covered mountaintops they went to. But how big a driver do you think this will be? I mean, they obviously did undercut the Garmin watch, the high-end Garmin watch, significantly.
Absolutely. I look at this very similar to how the Mac was theoretically designed for creatives. The watch is now also an outdoor enthusiast specialty. You don't need a dive computer. You don't need a Garmin watch. If you are a triathlete or anybody, frankly, that just really wanted all-day battery life and to be out there and to know it was going to work, I think they struck a chord. These were complaints that had been in the marketplace, and now they've addressed them.
So, let's talk about what this means over the longer term, because 50% of Apple's revenue now comes from the iPhone, but you're not going to buy an Apple Watch or AirPods if you don't have an iPhone. So Are you seeing Apple becoming even more reliant on the iPhone or still less reliant on the iPhone?
I think the world is reliant on smartphones, so that iPhone absolutely has to have features that sell it, because it drags the entire ecosystem with it, and that's not going to change.
So what are you looking, when you look out over the holidays and potentially a very busy quarter, but customers under pressure, they're paying more for gas and groceries and literally everything, though, iPhone's staying at the same price. Thank you, Apple. What do you think this upgrade cycle is really going to look like in a downturn?
I think the upgrade cycle is going to be contentious. And people have to make choices between what they're going to buy. In some cases, this is going to be, are you going to have heat or are you going to have an iPhone? But having said that, a smartphone is so critical to what people do in their lives that they'll choose a smartphone over, say, a PC as something. So I think that there's still great opportunity for the fourth quarter to be a great quarter for Apple.
All right, Maribel Lopez Research, good to have you back here on the show. Thank you for stopping by. Let you cool off. All right, coming up, we're going to talk a little bit more about those satellites and just how game-changing that new technology can potentially be, the ability to send SOS messages without cell service. Details next. This is Bloomberg.
VK ฟิล์มที่ช่างติดรถยนต์แนะนำติดง่ายการล้อนดีราคาถูก
At Bloomberg, we believe in the power of ideas. That's why we launched Bloomberg New Economy Catalyst. It's a community of global leaders and innovators who are blazing new trails to transform business and government. This platform will help them share their ideas with the world and provide access to the resources they need to bring them to life. Bold thinking, breakthrough action. Bloomberg New Economy Catalyst.
Back in 1997, I was interested in the following question, which is, there are a bunch of the dinosaurs called sauropod dinosaurs, which had really long, skinny necks. So Apatosaurus is an example. They also had really long, skinny tails. So I made a computer model that showed that, in fact, the tail of these sauropod dinosaurs could actually act like a whip, a bullwhip. Now, the way a bullwhip makes that cracking noise is because the tip of the whip actually goes about twice the speed of sound. Okay. And that crack is a sonic boom. Yep. I think the way they got a date was to impress the females by making loud booms.
No one covers the world like Bloomberg.
We have to get interest rates higher and bring inflation back to our target.
33 million people have been affected by this flooding in the monsoon.
Disruption is the whole point of a strike.
With unmatched reach and resources from more than 120 countries, the moment news breaks, 24 hours a day. Bloomberg, your global business authority.
Unlike stationary cell towers, communication satellites are hundreds of miles above the Earth and flying at over 15,000 miles per hour. To connect to these satellites, you need to be outside with a clear view of the sky. And the bandwidth is so limited that even sending a text message is a technical challenge. Typically, the only way to tap into such a network is with an expensive device that uses a bulky external antenna. We knew that approach just wouldn't work for iPhone. So, we invented another way. We designed and built custom components and specific software so that iPhone 14 antennas can connect to a satellite's unique frequencies.
There's one stock that went wild during the iPhone 14 unveiling, and it wasn't Apple. Bloomberg's Ed Ludlow back now with a look at Global Star. Very important partner. Ed?
Global Star. 50 minutes into the Apple presentation, Global Star is down 16% and the stock is halted pending news. On stage in Cupertino with URM, they're discussing the satellite text capabilities of the latest generation of iPhone. A few minutes later, the stock begins trading again. You see that on the right-hand side of your screen. It jumps from a decline of 16% to a gain of 41%. Before ultimately closing down 1.2%. Now, there have been rumors for almost a year that Global Star would partner with Apple to be the satellite operator, which is confirmed now in that regulatory filing. Apple is going to pay Global Star fees to provide this service. But for Global Star, this is a big win. This is a tiny company, $3.7 billion market cap, sales in the hundreds of millions of dollars each year. But for them, this is a really big win.
Big win indeed, and putting a lot of speculation to rest. Thank you, Ed. I want to talk more about Apple's new satellite connectivity and bring in Chris Quilty, the founder of Quilty Analytics, which works exclusively in the satellite and space industry. This is something, Chris, I know that you've been following for a very long time. And on stage today, Apple talked about how this took years to put into practice: hardware, software, infrastructure, innovation. Just how significant is it that Apple says they can now pull this off?
Well, I think it's a good innovation form. I think it's also a first step. The service, as it was announced today, is a fairly limited, worst case scenario, good to have as a background technology. But if you've been watching the broader industry landscape, there's lots of things happening with satellite phone connectivity, and other companies, including SpaceX and T-Mobile, just last week or 2 weeks ago, that announced a service that's a substantially more viable service. Companies like Iridium that are working with handset manufacturers, AST, Space Mobile, Link, and supposedly Android and Google are coming out with satellite phone connectivity also.
So let's talk about the T-Mobile and SpaceX example. What do they offer that Apple does not?
Well, the fundamental difference here that really matters is the spectrum. In the case of the Apple announcement, they are using dedicated satellite-only spectrum, which means Apple has to put, as they said, specific hardware, antennas and chips to work with that satellite-only hardware spectrum. In the case of what SpaceX is doing with T-Mobile or AST working with Vodafone and AT&T, they're actually using the carrier spectrum. So there's no change that needs to be made to the device itself. All the work will be done by the satellite. In the case of a company like AST, they're building one of the largest satellites, certainly one of the most powerful satellites out there, in order to do the work that the handset can't, because the handset has no modifications made to it.
So if this is a good first step, as you say, what do you imagine the second and third step might be?
Yeah, so Clearly, this is an opening salvo by Apple. It provides a basic level of service, can probably draw some extra interest in the iPhone 14. But I think given what's happening in the broader landscape, if Apple is serious about this, they would have to look at potentially building a satellite constellation of their own. Perhaps not a surprise that Globalstar does have a filing for over 3,000 satellites to potentially launch, and they'd have to build satellites, unlike the current second-gen or recently ordered third-gen satellites that have a much bigger antenna, much more power, and are optimized for working with that consumer handset.
So let's play this out a little bit. Do you imagine that someday Apple might be interested in building a competitor to Starlink, for example?
I would say not exactly Starlink. Starlink's main purpose is broadband, and that's not Apple's game, at least potentially here in the near term. I think the reason that they partnered with Globalstar, they're probably one of the weaker players in terms of their current revenue and their customer profile within the satellite, mobile satellite spectrum industry. What they do have is a very good spectrum position. And if they eventually use the full aspect of that spectrum, but there is a potential to offer a higher data rate service, certainly nothing that would compare with a Starlink service. But, think of it as a 3G, 4G, maybe even up to a low-level 5G type service in the longer term.
All right, fascinating to look that far out, if you will, to play on Apple's own words. Chris Quilty, Quilty Analytics co-founder, thank you. We'll be right back with more of Beat Tech. This is Bloomberg.
Yes, I agree. Okay.
ไม้สังเคราะห์ SCG ล็อกสีสวยทนจากทุกสภาพแวดล้อมที่มีเทคโนโลยี Color Lock Plus
At Bloomberg, we believe in the power of ideas. That's why we launched Bloomberg New Economy Catalyst. It's a community of global leaders and innovators who are blazing new trails to transform business and government. This platform will help them share their ideas with the world and provide access to the resources they need to bring them to life. Bold thinking, breakthrough action. Bloomberg New Economy Catalyst.
Hydrogen has a very special place in the universe. It's the first element on the periodic table. It is the most abundant element in the universe. And when clean energy advocates think about what can we find which would be as easy to use as fossil fuels, they think about hydrogen. The fuel that will, when burned, only produce water.
We like to imagine that if we just built enough of these and these, we could ditch fossil fuels and save the planet. Unfortunately, it's not that simple. There are some things where you just need a good old-fashioned combustible fuel. Now, startups around the world are betting that hydrogen can become the fuel of the 21st century.
These incredible products each offer so many great capabilities and work seamlessly together in a way that only Apple can deliver. making products that are so personal.
Apple CEO Tim Cook there. Before we go, I want to recap the day's event. I am joined now by Bloomberg's Mark Gurman, our resident Apple expert, and Julie Oscar, Forrester Research Vice President and Principal Analyst there. Good to see you, Julie. Mark, I want to start with you because obviously you previewed so many of the things that we saw today, but there must have been some surprises. What stood out most to you?
You know, leading up to the event, there were a lot of analysts who were expecting iPhone price hikes, particularly on the iPhone 14 Pro and Pro Max line. I had never heard that was happening, so I didn't believe it was happening, and little do we know, they announced it today with no price hikes. Very interesting in light of inflation, price increases you're seeing from Meta, from Samsung, and from other companies. However, there are some inflationary related price increases you're seeing in Europe and India, but if you want an iPhone 14 Pro, it's going to be that same $999. Now, I will note, if you look at the fine print, at some of the carrier deals this year, they're not as aggressive as last year, right? So last year, you were able to upgrade from a 12 Pro Max to a 13 Pro Max and get like $50 cash back on top of getting that new phone. This year, that same upgrade from a 13 Pro Max to a 14 Pro Max, it's going to cost most people between $300 and $600. So the carrier deal's not as aggressive.
You know, Julie, it's almost a given that every year the price of the iPhone goes up. We get a new one, and the price goes up. What do you make of Apple's play here? Is this genius or not?
Well, I think it's a nod to the economic headwinds that we feel like a lot of consumers are facing. So I think it was very smart, not only keeping the prices relatively flat, but you also heard Tim Cook say the word essential a lot. It's essential. It's essential. And it's not only essential, but now it's essential to our health and essential to our safety. So I think it's smart marketing.
Mark, when it comes to the technology, you know, as you reported, we're seeing more significant upgrades than we saw last year, but to some people, they might still look at this phone and say, looks like basically the same phone. But, you know, those technological upgrades that go into, you know, a new chip, thinner, faster, longer battery life, are so hard to do. Can you talk to us about the significance of the inside changes that we can't see?
Sure. I mean, if you're looking at the jump from the 13 to the 14, I'm not talking about the Pro models, I think I can sit here today and safely tell you that there is absolutely no reason for you to upgrade. There's no faster processor, the battery life is about the same, and the camera enhancements going from the 13 to the 14 are not that significant. But when you get to the Pro models, you are seeing major changes, right? That new notch cutout, they really turned something that's an ugly portion of the iPhone into something that quite frankly looks awesome, right? Changing the notch into a softer area where you can see when your Uber's arriving, you could see your music playback, and that technology is something they've, you know, spent years developing. The Apple Watch Pro, we first wrote about that about 2 years ago. This thing has been in development probably in some way or another since the original Apple Watch launched 7 years ago. Let's talk about the car crash feature, right? That required them to actually do car crash testing. They showed a video of that. That takes years, right? They need to get this right. That's years of data collection. And the lengths they go to for testing and development in terms of features like that probably go beyond what any other company in the space goes through.
Right. You know, I've dropped my phone so many times. How are they going to know that's not a car crash, Julie?
Well, you weren't going 60 miles per hour, so there's that. You were probably just standing.
But, you know, what do you agree with there, and what would you pick a bone with of what Mark had to say?
Yeah, so I think the technological advances are pretty substantial, but I think the thing is, for a lot of consumers, it's subtle.
Right.
You know, and it's one of those things, if you're just going from a 13 to a 14, you're like, okay, it's a little bit better, but if you're going from like an 11 or a 12 to a 14, you can't really articulate it as a consumer, but at some point you're like, oh my goodness, that's so much better. It's so much brighter. The pictures are so much better. I had no idea. So there's a lot of things I think that are just subtle. I think a lot of the other things they did, they added sensors, right? So when you add sensors, you get more data, you get more precise data. They can model more activities. Like my favorite, as I told you, is being able to track my kick sets in the pool, right? They can do that with those kinds of sensors. There's other really subtle things about managing the battery, like dimming the phone. You know, the transparency, the spatial audio. There's a lot of things that are just really subtle I think that are hard to communicate to consumers, but when consumers experience it, they just have a wow effect.
What's your sense of how difficult supply chain issues are going to be to manage over the next 6 months?
I would say not being an expert in the supply chain, it seems to be impacting the world economy, but somehow Apple seems to be doing okay.
And Mark, you would agree with that, right? I mean, when you look at the lead times on these various products, they're not that bad.
Yeah, so far on the Apple Watch Ultra, what we're seeing is only one of the 3 variations is already shipping at the end of October, whereas you still get first day, September 23rd availability for 2 of the bands. Now, the impact seems to be on the bands themselves, not the Watch Ultra. So if you're trying to get a Watch Ultra on launch day, my recommendation for you would buy any band combination just to get that watch and then worry about buying the band you want later. So clearly in terms of the production process for those bands, trying to figure out which bands are going to be more popular, that's going to be tougher for Apple. Also, the Watch Ultra is 1 SKU, right? 1 color, 1 finish, 1 screen size, right? Much less complex to produce when you have fewer SKUs. So I think they're going to be okay on that. I also think they're going to be just fine on iPhone production. The issues they had with iPad and Mac supply, those seem, based on my research, probably 90 to 95% resolved. We'll see what happens in October, November when they launch new variations for the Mac and the iPad Pro.
Now, one thing we didn't hear much about is the mixed reality headset that you've, of course, been reporting on. I know you're expecting it to come next year. Unless there were some Easter eggs today that I didn't see. Did you hear anything, Mark, that gave you more clues as to what this headset will look like?
No Easter eggs today. I know in Power On we wrote the other day there would be no reveal of this mixed reality headset. I'm not expecting them to announce that until next year, and I think 2023 and 2024 will be the year of AR and VR for Apple. No new augmented reality features on the iPhone, nothing AR related to the watch. There are some new transparency modes and some cool new audio features for the AirPods Pro 2 announced today. It's plausible that some of that functionality will make their way into the speaker system on the Reality Pro, which is, I believe, will be the name of the headset next year. But I think we're still a few months away before seeing that headset come to fruition.
And what about the M word, Julie, the metaverse? What's Apple's play going to be? Do they need one?
Well, there is no metaverse, so Apple's not late yet. No, I think, more seriously, I think Apple's really good at timing the market, and what we're seeing now are some metaverse precursors, which means we've got some luxury brands selling you a Gucci purse for your avatar in Roblox, which is probably something more that your children play. Right, so there's some things like
I prefer a real Gucci at this point, but
a real Gucci at this point. No, but I think, and also I think the notion of these augmented reality glasses, like we're just not there with the technology yet, where we can get a comfortable headset on consumers that's going to wow them with a great use case at the right price point. So I think I agree with Mark. We may see some kind of a pro version announced in the next couple of years, but I believe Apple will come into the market when they feel the market's ready and they feel consumers ready. There's a good use case, and I think Apple's just generally very good at timing the market, and I think it's still too early.
And Mark, you've reported that they're still working through, hardware, software issues with that forthcoming headset. I want to end with you on comments that Tim Cook made to me around the last earnings call, which aligned with your reporting that Apple is going to be spending through the downturn. That's something that they've always done. He feels like it's made them stronger on the other side, but also that they're going to be deliberate about that spending. Do you have any sense of where Apple will pull back and not quickly?
Yeah, I mean, I think that you're seeing budget cuts across the company. I don't think you're seeing that happen to core areas. I think that they have enough people to launch the products they want to launch. I think you're going to see a slowdown in hiring. In fact, they are doing a slowdown in hiring. It's very difficult right now to get hiring approval at Apple. You're going to see them spend probably about the same on research and development for the next year or so just no growth there.
Okay.
But I'm not alarmed about the company's prospects because of this.
All right. Bloomberg's Mark Gurman, Julie Osk of Forrester Research. Thank you both. Couldn't think of a better way to end the show. And thank you all for watching this special edition of Bloomberg Technology from Apple headquarters in Cupertino. Thursday, we've got a fun show coming up. Golden State Warriors, Andre Iguodala will be with us. If you're an Iggy fan, you don't want to miss it. This is Bloomberg.
มาแล้วที่ฟู้ดแพนด้าส่งฟรีพร้อมรับเงินคืนสูงสุด800 บาทใครใช้คนละครึ่งสั่งฟู้ดแพนด้าเลย
Quem prova o bacon Seara Gourmet descobre uma experiência que vai além do sabor. Bacon Seara Gourmet. Mais que um sabor único, uma explosão de sensações. Descubra.
At Bloomberg, we believe in the power of ideas. That's why we launched Bloomberg New Economy Catalyst. It's a community of global leaders and innovators who are blazing new trails to transform business and government. This platform will help them share their ideas with the world and provide access to the resources they need to bring them to life. Bold thinking, breakthrough action, Bloomberg New Economy Catalyst.
So you've built a successful company, but you might not want to run it for the next 10, 15, 20 years, or do you? And if you didn't, would you want to go into government? If the president called you to serve our country, would you go into government, or would you start another company?
I love what I do. And I feel like I have this luxury with 23andMe that it keeps evolving. You know, we started out just as a consumer company. We're thick in research. We got into drug discovery in 2015, and now we're getting to the delivery of care. So I've been really lucky with 23andMe that it's been endlessly interesting. And I'm surrounded by incredibly talented, brilliant individuals where I learn from them. And what I always advise people to do is, like, you should take jobs where you're learning. And if you stop learning in a job, then you should quit. And, like, frankly, when people leave 23andMe, like I say, if you're not learning anymore, you should move on. So I'm 100% committed to 23andMe. That said, my other passion is other direct-to-consumer. Like, I want to build out a true consumer-empowered healthcare world, like one that is outside of the existing system. And there's no greater force than government.
Part of what I love about business is you get to build things from nothing. I don't have any investors. All this is all money in. This is me just building it, building it, building it.
We were thinking big from the beginning. I mean, the reason that I was interested in doing this in the first place was a much bigger challenge than making a comfortable shoe or doing something in the fashion industry as a narrow opportunity. We thought that there was a big leadership opportunity. We looked around at an industry where there was 20 billion pairs of sneakers made every single year, and it was 100% made from plastic and the hides from cows, and it was terrible for the environment. And we thought that we could offer something to consumers that was differentiated in the way it feels, more comfortable, higher performance, and do that because we use sustainable materials. And in doing so, we could take a really interesting leadership opportunity and grab that and use that to tell a totally different story and compete on a totally different vector than what the rest of the industry were doing.
When you've had your fill of IPOs, ETFs, and CPI,
tune into the lineup for some NFL, NBA, and MLB.
Catch the lineup right here on Bloomberg.
This is Bloomberg Daybreak Middle East. Our top stories this morning.
We're in this for as long as it takes to get inflation down. So far, we've expeditiously raised the policy rate to the peak of the previous cycle, and the policy rate will need to rise further.
Lael Brainerd and a host of other Fed voices say more rate increases are in the pipeline. But next up is the ECB, where traders are anticipating the first 75 basis point hike since 1999. Speaking of dates, The pound sinks to the lowest level against the dollar since 1985 on Liz Truss's first full day as Prime Minister. And the Bank of England, Andrew Bailey, is not optimistic about the economy.
The recession, going back to what, I hope it doesn't happen, but obviously we have forecast it because we think it is sadly the most likely outcome. Of course, it is overwhelmingly caused by the actions of Russia and the impact on energy prices.
Office rents in Dubai are rebounding for the first time in 6 years, rising faster than New York or London as the global banks and businesses expand in the financial hub. Apple unveils a new lineup of devices with a few surprises, apart from the fact that it's not raising US prices, despite raging inflation. Which has gone 8 a.m. across the Emirates. Warm welcome to the show. I'm Menace Cranny in Dubai. So we have this juxtaposition between the summer of 75 bips anticipated from the Fed, from the ECB, it's a toying cost, and of course, in the Bank of England, would they even dare do 50? That's the question, nay 75. Now, the pound has managed to add back 100 basis points. It made a 1985 low yesterday, and Credit Agricole say the market is just relishing, bashing the pound, taking it down to a 37-year low, rallying by 100 basis points. The last time the pound was down here in 1985, yes, you got it, we give you the chart of the day. I want to know what love is by Foreigner. It was a belter. But I can tell you this, Citigroup say stay short the pound. State Street say the twin deficits will be the nemesis of this currency. Do they have the IMF's telephone number? At number 10, Downing Street. Let's check in terms of the rest of the market. Stock markets managed to rally, even though Lael Brainard's message was not dovish. She talked about the need for higher rates. You know, hope lives eternal with these equity markets, doesn't it? We put on 2%, but is that because you've had a drawdown of 8% since the high, that summer of love in stock markets? Michael Burry has a brilliant tweet out there. He's revving up the gloom monster machine and prediction. We've not hit the bottom yet. He says 2 SPAC failures, that is not enough to call the bottom. And Goldman say we've yet to hit a decisive low. You've also got Interactive Brokers saying you've got to be 16% below here. 16% below here before they will call a low. Stock markets managed to put on 2%. We carry through on the upside this morning. But I want to show you the oil market. This is all the sort of I suppose the fears of the Saudis coming home to roost in one manifestation, which is 2 days of the market. We collapsed by 6% yesterday. We put it a little bit back on this morning. Chengdu is still in a lockdown. And of course, we've managed to move to a magical death cross, which is where the 50-day average crosses over the 200-day moving average. And that's for the first time since 2020. Technicals matter. Don't ever let it be said they don't. Juliet Sally is the technical queen. She is in Singapore. Jules, how's your board?
Hey, Menace. Well, of course, the yen still at that 1998 low, giving a very good boost to Japanese stocks today. But overall, we are seeing the regional benchmark index rebound from that 2-year low. So it is a much brighter picture for equities, although you're still seeing some subdued market action in Hong Kong. And that index, the Hang Seng index, actually on its longest losing streak of the year. Now, we did have the PBOC once again really try to defend the weakness in the yuan. It set a stronger than expected fix for the onshore. For a 12th day, you're still seeing weakness, though. The offshore there down by about 0.2%, and the Aussie leading declines in G10 currencies. But we've seen Aussie bonds spike. We just heard from the RBA Governor Lowe, really indicating that perhaps those jumbo hikes we've seen from the central bank could start to slow. Now he is saying that a lot of inflation is driven by demand and savings mainly held by upper to middle income Australians. Let's have a look at the broader Aussie picture as well, because we did have the trade surplus almost half. This was due to coal and iron ore tumbling. The trade surplus in July halving, with a lot of the holiday makers heading abroad to take advantage of the Northern Hemisphere, and then also, of course, the shipments of coal and iron ore tumbling. Exports down 10%, imports jumping 5%, so showing some of the impact on the Aussie economy, and certainly the reaction here to these comments by RBA's Lowe that we could actually start to see these jumbo rate hikes coming to an end. Manus.
Jules, you love that word jumbo. Change the flow show there, Jules. Get that passport out. Get back down under. Get back home for a long weekend. Jules, we'll see you a little bit later on. Julia Sally there. Where are you going on Saturday?
To Sydney. You'll see me there next week.
Good girl yourself. All right, we'll see you there. You're getting too close to that Sydney office. OK, Juliet Sally there in Singapore, travelling to Sydney. If she's on a seat near you, share a glass. Well, the top Federal Reserve officials are continuing to pledge aggressive rate hikes ahead of their fight against inflation. Our global economics and policy editor, Kathleen Hayes, is with me. She's in New York. So, Kathleen, all that narrative, all I want to know from you is whether you think the consensus is now building towards a 75 basis point hike. They can't miss the opportunity, Kathleen, can they?
They've certainly set everyone up for it, and I would say in answer to that, I think they're just waiting for another shoe to drop like the CPI next week after seeing two very hot jobs reports in a row, after seeing a CPI report the month before that was certainly leading someone like Lael Brainerd, who is the vice chair of the Federal Reserve. She doesn't speak as much as some other people do, but when she does, you know, as she did today, she was sending a clear message. More rate hikes are going to come. I would say she certainly didn't shut the door on 75. Let's listen.
We're in this for as long as it takes to get inflation down. So far, we've expeditiously raised the policy rate to the peak of the previous cycle, and the policy rate will need to rise further.
Eventually, the risks get more two-sided. In other words, not just the risk of not doing enough to fight inflation, but the risk of doing so much you cause a recession. But for now, she says policy needs to be more restrictive. Loretta Mester from the Cleveland Fed. She's the one who wants the inflation rate in the first half of next year. I should say the funds rate above 4%. She continues to say more needs to be done. William Barr, who's the new, Michael Barr, I should say, new vice chair of supervision, saying we have more to do. We have to defeat inflation. Susan Collins from the Boston Fed today saying she's undecided, Manus, on the size of the hike, 50 or 75, but she's clearly heading in that direction. She's clearly waiting for at least one more piece of data like the CPI to convince her. Beige Book today, cross currents. Retail sales are strong. Labor market's tight. Inflation's elevated. They do, in some districts, worry about the economy starting to slow down, and that could be a problem. But for now, as Bloomberg Economics says, the door is open to a 75 basis point hike when you look at what they said in that Beige Book.
Well, let's pivot across the Atlantic. Of course, we've got the ECB. We're waiting for them today. They've got a currency crisis. You've got a strong dollar, which is helping your inflation narrative. They have a currency and an energy crisis, and recession risk abound. Kathleen, what does that do to the probability of the scale of a jumbo hike from the ECB?
You know, when you put it that way, Manus, I'm inclined to say, hey, they've got to be taking a second thought, right? In Jackson Hole a couple of weeks ago, when Isabel Schnabel, one of the top members of the ECB's board, said that central banks have to keep fighting inflation, even moving into a recession, and that's what it makes to take sure, that's what it takes, that is, to not let inflation expectations get entrenched. Now, since then, of course, we had Russia cutting off the gas to Europe. We have this energy crisis has started. So will it change their mind? Traders are still looking for about 68% odds that they will go ahead with a 75 basis point hike. I think that when you have CPI up 9.1% year over year in the latest month, when your core CPI is up 4.3% and rising, even if you've got a Eurozone recession chance of 55%, they're still going to look at this very, very carefully. I think, Manus, maybe for them it's a question of saying maybe we should go ahead and just show the determination, show, that's what Isabel Schnabel taught, the determination to bring down inflation. Show it now, we still have a chance to move aggressively, because maybe in a while we won't, and that's the case for the 75. But I think any analyst you talk to, any economist who watches them closely, most people are not convinced at all. They say it could go either way. Hours from now, we'll know.
Absolutely, and I think the Aussies just threw a spanner in the works on the jumbo rate hike narrative. Kathleen, thank you as ever. Staying late, putting in the hours. That's Kathleen Hayes in New York. Well, the Chinese megacity of Chengdu has extended a week-long lockdown in the most downtown areas. That's after COVID-19 cases increased. Chief North Asia correspondent Stephen Engel joins me now. Stephen, this was supposed to be the great litmus test that Chengdu would reopen. This zero-COVID policy was working. What has gone wrong?
Well, I think zero COVID policy is working. They're trying to work at getting down to zero community spread, and they haven't been able to do that. So the policy is working. It's just not being able to necessarily eradicate the virus. So people who are now being stuck in their apartments for another week at least, as authorities say, they're aiming now to have at least another week of total lockdowns in the central parts of Chengdu, a city of 21 million, as they try to get down to zero community spread. But you know what? This is whack-a-mole, Manus, because new cases keep on popping up, especially as the more easily transmissible variants erupt in parts of China. I'm just looking at the headlines coming across the China wire. 25 new cases in Shenzhen, 10 cases in Beijing, 13 in Shanghai, 14 in Guiyang. So there's a number of different cities that are having cases. Now, Chengdu had 116 new cases yesterday, on top of 121 the day before, 90 the day before that. So they are still a long way from getting to zero. But look at the ratio. It's 21 million people, and they're locking down the entire city for 116 new cases. That shows you the dedication to COVID zero policies, even though there's so much anecdotal evidence that perhaps it's going to be relaxed after Xi Jinping has his party congress on October 16th. I'm not seeing any evidence that they're going to necessarily change their policy. There has been some flight and quarantine relaxations, but again, that does not equal total relaxation of COVID zero. I think China's in for the long haul, and the economy will suffer.
Yep, that makes it ever more probable, Stephen, that we head closer towards that 2% level that some of the analysts are talking about in terms of growth. Way, way, way away from the 5.5% that was originally mooted at the start of the year. Stephen, thanks. Stephen Engel there, alongside me from Hong Kong. Now, Apple has unveiled a new lineup of devices with a few surprises beyond one major one. It didn't raise the prices during the worst years of inflation in decades. Bloomberg's Emily Chang has the details.
Coming to you from Apple headquarters in Cupertino, Apple unveiling a slew of new products, including new iPhones, watches, and AirPods. Perhaps the biggest surprise isn't the new technology, but how much it costs. Despite record inflation, Apple isn't raising the prices on its new phones. So you can buy a new iPhone 14 for the same price you could buy an iPhone 13 last year. Of course, there are technological upgrades, especially when it comes to the Pro, thinner, faster, longer battery life, better camera technology, also satellite capabilities for all the new iPhone 14s, meaning you can send an emergency SOS from wherever you are in the world, even if you don't have service. They also unveiled a new Apple Watch Ultra, a smartwatch geared toward outdoor enthusiasts. They call it your own personal dive computer, if you will, also undercutting Garmin, the nearest competitor on price, by a few $100s if you're looking at the higher end. And when it comes to AirPods, we got the first upgrade there in 2 years. Of course, the big question is, will consumers buy any of these new products when they're already under pressure, facing higher prices, everything when it comes to gas and groceries? So all eyes will be on just how big this new Apple upgrade cycle will be. Emily Chang, Bloomberg, Cupertino.
Let's get back to Julia Talley. She's got the first word headlines in Singapore. Jules.
Thanks, Manus. Vladimir Putin blaming Western nations for the shutdown of the Nord Stream natural gas pipeline. Speaking at a forum in Vladivostok, the Russian president said gas flows to Europe could resume as soon as sanctions are lifted. It is the first time Putin has commented on Nord Stream since the key gas conduit was closed indefinitely.
Nord Stream 1 is now practically shut down, and everyone is saying Russia is using energy as a weapon. More nonsense. We deliver as much as our partners need. We're not delivering gas into the air, but according to requests. What happened? There are 2 lines of gas delivery in Ukraine. Ukraine shut one line down on a made-up pretext that it was not in control of it. Ukraine closed it, not us.
Meanwhile, Ukraine's top army commander has warned that the war is likely to stretch into 2023. He pleaded for allies to send longer-range weapons to aid its fight. Pakistan's former Prime Minister Imran Khan says he regrets his comments at a rally about a female judge. Khan is seeking the dismissal of a contempt of court proceeding that is scheduled for later. His filing calls the remarks unintentional. After losing a no-confidence vote in April, Khan has held massive public gatherings blaming political rivals, the judiciary and the military for his ouster. And office rents in Dubai are rebounding for the first time in 6 years, rising faster than in London or New York. The Emirate is attracting more wealth and expats due to its nimble response to the pandemic and relatively easy access to visas. A growing clutch of firms are also expanding in the Sunsplash business hub as they move offices from places like Hong Kong and Russia. Global news 24 hours a day on air and on Bloomberg Quick Take, powered by more than 2,700 journalists and analysts in more than 120 countries. This is Bloomberg Manus.
Jules, thank you very much. Juliet Sunny there in Singapore. We'll have a conversation now for the region with Goldman Sachs Managing Director, Global Investment Research, Walid Moshin joins me, and Egypt's Minister for International Cooperation, Rania Al-Mashad. But up next, we're counting down to the ECB decision as Europe grapples with its energy crisis that sent inflation to record levels. And we have currency capital's Ryan Lamond joins me next. This is Bloomberg.
Coal is the single biggest contributor to climate change. It is not only bad for the climate, it's also really bad for public health. The Beyond Coal campaign is convening businesses, cities, and mayors together to take actions. We are on the right track. So far, the US Beyond Coal campaign has closed down over 65% of all the coal farms in the US, more than half in Europe. We know coal's days are numbered.
What do you think is the future of the US dollar as world reserve currency?
What we are watching is actually not the competition between the US dollar and Bitcoin. I think actually what you're watching is most of the people adopting Bitcoin as a reserve asset, but I may not be able to get access to dollars for whatever reason. And so instead I'll opt into Bitcoin. I only need an internet connection to do that. For the next 50 years, you are absolutely going to see a monetary revolution. But what you're going to see in the short to medium term is the strongest fiat currencies will hold on for much longer than we probably admit.
I want to disagree a little bit with what Pomp was saying. The moment that I can buy my food, my clothing, and my shelter in Bitcoin will be the moment I don't really want to hold on to a government currency. Anyone who still doesn't have a Bitcoin wallet is going to see that cataclysmic event and be left on the wrong side of it.
Stay at the surface, and the surface is all you'll see. Essential intelligence from S&P Global takes you deeper, where a more prosperous future is yours for the seeking. S&P Global. Seek and prosper.
Inflation in our country is just far too high. We're not close to the Federal Reserve's target for inflation, and so I'm quite focused, and the Fed is quite focused on making sure we do the steps necessary to bring inflation back down to its target.
Fed Vice Chair for Supervision, Michael Barr, on inflation. You got a firmer dollar being supercharged by bets on higher for longer rates. It's hampering the stock rebound in Asia and sending currencies, including the yen and the pound, to multi-decade lows. The ECB is next up. They take a stab at making a move against inflation while minimizing the economic damage. That's a heck of a conundrum. Ryan Lamond is the advisor on the board of directors at Currency Capital. Ryan, great to have you with me this morning. So, you know, there's a wonderful headline. It's the summer of 75. Will the ECB do 75? The Fed do another 75? And the Bank of Canada did another 75. But here we are. I would say you have quite a hawkish narrative being delivered by Mester, Brainard, the vice chair, and of course Barr. Is the pathway to 75 basis points an easy one for the Fed to win?
Good morning, Manas. Great to be back. Well, it's very tough, actually. And let's split. The Fed first. Fed is on 75. However, it's not enough, in our opinion. They are still not reducing their balance sheets. They had said $47 billion a month, and then they were double it, but they haven't done any of this yet. These high interest rate hikes are not sufficient. If you look at financial markets, risky assets prices are still very high. This is loosening financial conditions rather than tightening them. So I think the Fed should do more to fight inflation. Inflation did drop slightly, but ex-energy, it did not. It actually increased. So they have to reduce their balance sheet. They have to do slightly more.
Well, what I would say back to you on that is that nobody is pricing in a more aggressive QT, nay bonds. I know bonds are down by 10 basis points this morning. Anybody's guess why. I mean, energy's lower. But I would say bonds, equities, and the dollar have not priced in a much more aggressive QT. Have we got the tolerance for an aggressive QT? What is aggressive QT? What do they need to do?
Aggressive QT is actually doing what they say they were going to do, which is reduce their balance sheets by $47 billion a month or double that, and they have not done so. So yes, risky assets are not pricing this because the Fed has showed that it is not doing it and maybe will not do it. So the Fed today is in a corner because more aggressive, given the geopolitics, this might create not a hard landing, but an actual crash. What we're seeing in Europe today is very, very concerning. In our opinion, what's happening in Europe is the worst energy crisis we have seen since the oil embargo of the 70s. This can get very, very ugly in Europe.
So it's not ugly enough yet for you in Europe. Tell me how ugly it gets.
Ugly is what we're seeing in the headlines, like yesterday, Switzerland saying if you increase the temperature in your home by more than 19 degrees, they put you in jail. This is a headline yesterday from Switzerland. Ugly is when Germany has to reduce its electricity consumption by 25%, electricity produces by 46%. This is absolutely massive. This is disruptive.
What are we not pricing correctly? Because, okay, you can put me in jail if I turn my heater up too much the next time I'm up in Switzerland, okay? And there's going to be riots, people have said to me. So what is mispriced? The euro in terms of lower to go, 95, 96 bunds. Do I buy bunds and hide out in bunds? That's where I had a guest tell me yesterday. So if it's going to get more ugly in Europe, transcribe ugly to assets.
Assets is euro going potentially below 0.9. So we could see the lows of 0.8 handle.
So 80 to the dollar on euro dollar. When?
3 to 6 months. We could see that easily, I think.
So that's trash the euro. Where do I hide? Bunds, short end, or tens?
Probably tens no, because this is an extended recession. I would more look at the short term, short end. This is a much safer bet. I would go to the US dollar. I would go to the Swiss franc, and I would go to more real hard assets.
Tell me this. What is the risk the ECB has a Trichet moment Mark II? Raises rates, 50, 75, I mean, split a hair, really. 75 basis points hike, and then has to very quickly U-turn ACA Trichet in the IF crisis. Is that a real risk?
Absolutely. Absolutely. However, Trichet was not faced with the inflation that Europe is facing today.
No, he wasn't, but he saw the folly of his move and immediately backtracked. What is the risk of that, and what is the consequence of that on the currency?
Well, this could happen.
So it's a real risk?
Oh, yes, absolutely, absolutely. Today, Europe will face a recession. Not might, will face a recession, one of the worst recessions it has faced. We are heading towards it, and I don't think risky assets are pricing it correctly. On the currency side, on the euro, it's a wild guess. Literally a wild guess today.
Okay, and to be fair, you did put a price. You did put a price down at 90, and I would imagine an outlandish call or a left tail risk call of 80. So let's just put a bit of context around it. But then transfer through that to asset allocation. I've got Goldman Sachs telling me buy value in America, and yet the Russell has collapsed by the longest run of losses since 2018. So I don't know whether they're just speaking their book. If you've got to have equity allocation, you probably do. Where is that?
It's very hard. It's a very small bucket, cherry-picked. I would go for small caps that are still growing, non-cyclical. It's a very, very, very small bucket again. 50% cash. I would look at the Swiss franc. I would look at specific currencies.
You have a portfolio with 50% cash in it at the moment.
Yes, absolutely. Today, yes.
50% cash, long Swiss.
Long Swiss, long private equity, and there are specific sophisticated strategies that are convex, specific to iTrax and CDX.
Okay.
These are synthetic protection instruments, yes.
Okay, my other sort of manic fascination at the moment is intervention in dollar-yen, okay? And I like what Martin Malone sent me when, you know, Kuroda, Sakibara was in charge, Kuroda was his deputy, and intervention only came when it came in size, it moved the market, not flipping around at the edges. G2 intervention, does it happen this year? And if so, by what kind of size? And can they move the yen? Can they halt the demise of the yen?
I couldn't say. I really couldn't say. There's so many wild cards happening at the moment. I couldn't give an opinion on that or give a forecast on that.
Okay, that's, you know what, you've been gracious enough to give me some punty calls on euro dollar, so I'll let you off the hook on that, but I'm obsessed with G2 intervention, which Janet Yellen says should be rare and exceptional. Mind you, these are odd times. Ryan, thank you very much, Ryan Lamond there, Chief Advisor on the Board of Directors of Securrency Capital. Breaking news from Australia, not from the Central Bank this time, but from the Legislature. Live shot of Sydney Harbour that you're seeing there. So Australia has passed the first major climate legislation in more than a decade, and this is as we go towards COP27 in Egypt. The pledge is to accelerate emissions curbs, sealing the key polluters return to, I suppose, a force for global action on global warming. So that is quite an incredible shift for Albanese's administration. It's the climate change bill, a 43% cut in carbon dioxide emissions from 2005. And the target is by 2030. I'm showing you the rates card for Australia because it is Mr. Lowe, the governor at the RBA, who has qualified himself by talking we may be at the end or nearing the end of jumbo rate hikes, that they will need more rate hikes, but maybe the summer of 75 is coming to an end. Aussie rates roll over. I want to show you a quick snapshot on dollar yen. I'm a bit upset. You know what? Have a look at the bond market. I mean, you're seeing yields drop there by 3, 4, 5 basis points this morning. Is it because oil tanked by 6% yesterday? Do you really believe that? I'll leave you with that thought. This is Bloomberg.
We believe in the power of ideas. That's why we launched Bloomberg New Economy Catalyst. This platform will help them share their ideas to reshape our world. Bold thinking, breakthrough action. Bloomberg New Economy Catalyst.
Get the power of app analytics and engagement in one single platform.
No one covers the world like Bloomberg.
We have to get interest rates higher and bring inflation back to our target.
33 million people have been affected by this flooding in the monsoon.
Disruption is the whole point of a strike.
With unmatched reach and resources from more than 120 countries, the moment news breaks, 24 hours a day. Bloomberg, your global business authority. Everything you need to get set for the start of U.S. trading. Bloomberg The Open with Jonathan Farrell. Drilling down on the numbers and preparing you as only Bloomberg can. Weekdays on Bloomberg. However you get your news.
This is Bloomberg Daybreak Middle East.
On Bloomberg Radio.
Welcome to Daybreak Australia. This is Bloomberg Technology. This is Bloomberg Green.
On TV, radio, and the web, this is Bloomberg.
The difference between a platform that helps you work smarter and faster, the difference is Bloomberg Law.
This is Bloomberg Daybreak Middle East. Our top stories this morning.
We're in this for as long as it takes to get inflation down. So far, we've expeditiously raised the policy rate to the peak of the previous cycle, and the policy rate will need to rise further.
Lael Brainerd and a host of other Fed voices say more rate increases are in the pipeline. But next up, it's the ECB, where traders are anticipating the first 75 basis point hike since 1999. Speaking of dates, the pound sinks to the lowest level against the dollar since 1985. And Liz Truss's first full day as Prime Minister. And the Bank of England, Andrew Bailey, is not optimistic about the economy.
The recession, going back to what, I hope it doesn't happen, but obviously we have forecasted because we think it is sadly the most likely outcome. Of course, is overwhelmingly caused by the actions of Russia and the impact on energy prices.
Office rents in Dubai are rebounding for the first time in 6 years, rising faster than New York or London as global banks and businesses expand in the financial hub. Apple unveils a new lineup of devices with few surprises, apart from the fact that it's not raising US prices despite raging inflation. Markets are moving. Juliet Sally is tracking everything from Singapore. Central bank speak from the Aussies is moving the market, and the Chinese are trying to retether their kites. Good morning, Ms. Sally.
Good morning, Mr. Cranny. Let's start with what we heard from the RBA, though, because you can now see in this chart behind me that traders are pricing out rate hikes in Australia as early as April. Now, on Monday, before we had that 50 basis point hike from the RBA, they weren't pricing them out until August, which is 4 meetings later. So really this rhetoric coming through from RBA Governor Lowe today in a Q&A, very much being taken by the market as a sign that perhaps these jumbo-sized hikes are on hold for now. RBA Governor Lowe saying the case for a slower pace of tightening becomes stronger as the cash rate moves higher. We have seen 2.25% of rate hikes from the RBA since May, taking the cash rate to 2.35%. Let's have a look at the market reaction. We've certainly been seeing bonds surging on the back of these comments. Governor Lowe also saying a lot of inflation in Australia is driven by demand, but also that savings are being held by the upper to middle income Australians. So when this price hike starts to bite the lower income, that's really going to flow through into the economy. The Aussie, the worst performing G10 currency today, but the Australian stock market has risen quite sharply on the back of these comments today, Manus.
And just run us through what's going on the equity side. There's a rebound there. I mean, we had the US equities managing to put in nearly 2% of a rally last night. Is this dovetailed to that?
It certainly is, and we are finally seeing some gains coming through on the regional benchmark index, which had been holding at those May 2020 levels. You've still got that very weak yen. Have a look at the Nikkei really leading these gains up by around 2%. And the other key focus for investors is the continued moves by the PBOC to really try and stem the weakness that you are seeing in the currency there. So we had a 12th straight day of a stronger than expected fix from the PBOC, but still seeing weakness coming through in the renminbi, down by about 0.1% and getting very close to that 7 handle. Manus.
Jules, thank you very much. Julia Sally in Singapore on the markets. Goldman Sachs has lifted its forecast for the pace of rate hikes by the Federal Reserve. The US lender is now expecting increases of 75 basis points and 50 basis points for September and November, respectively. My next guest says Saudi banks are the most geared to benefit from higher rate environment. It's Waleed Moshin, Managing Director for Global Investment Research at Goldman Sachs. Waleed, thank you for joining me. So Goldman Sachs, never far from the fray, upping the game in terms of the velocity to rate hikes. So where do you see that momentum getting to? Where do you see peak rates? And are equity valuations already reflecting a peak rate, let's say, of around 4%, which is the building narrative?
Good morning, Manus. Yes, thank you so much. Look, as you mentioned, some of the Middle Eastern banks are quite positively geared to high rates. And we do see selective opportunities within the Middle Eastern banks, even at current levels. So in our view, while rate hikes, some of them are priced in, we do think that they're not fully priced in. And that obviously creates an opportunity. And if you look during the last quarter, a number of the Middle Eastern banks, particularly the Saudi banks, did upgrade their net interest margin forecasts. And that was also true for some of the UAE banks, which effectively means that the market is not fully pricing in, cited with a strong macro backdrop for the Gulf. You've got strong commodity prices. Large GCC countries are all in fiscal surplus, and there is good economic momentum. So when you see a rising rate cycle within strong economic momentum, that worries us less. Uncertain times globally, but if you look more locally, the macro is quite supportive, and if you look across the banks, asset quality has been quite robust so far.
Okay, so I'm a believer. I'm a believer in that NIMs will win relative to provisioning. Let's talk about lending. A lot of bank analysts and various a little bit of a reappraisal, let's say, in the mortgage approvals in Saudi Arabia, which is what we're showing on the screen at the moment. Are you worried about running out of a bit of puff in Saudi